ready? We're doing a brand new series of our VC Open Office Hours today. And we have Miisha Addy. We're very, very excited. But before we get to all of that, so this is the Founder Series. And this series, we will have the Newtown Partners team talking to some of the most interesting logistics, supply chain, and healthcare startups on the African continent, learning from the founders about their perspective on what they're seeing on the market and what's really interesting that they're seeing that's happening. So before we get into all of that, though, Jill is going to tell us a little bit about Newtown Partners, just to remind us all what we're doing and what we're about. Jill.
Thanks so much, Amber. So just as a quick reminder, Newtown Partners, which manages DP World's $50 million corporate venture capital fund, was started by two successful entrepreneurs, Lou Klaas and Vinnie Lingham. They built some good businesses, exited them, and graduated into angel investing. How they built businesses and invested was very much research focused and thesis driven. So they look for sectors, countries, industries where there's an opportunity for disruptive innovation by utilizing tech. As you know, logistics and supply chain is an industry that is still driven mostly by manual processes and relationship-based trading. However, startups are leveraging technology to change the basis of competition. And DP World has partnered with us to invest in its future innovation partners early on. We invest in seed and Series A startups globally that are leveraging emerging technologies and disruptive business models in freight logistics and supply chain management. Yeah, a little bit of an overview. Thanks, Eka.
Yeah. Well, now that we've got all the admin stuff out of the way, today, as I said, we have Miisha. We're so excited. JetStream is one of our absolute favorites on the supply chain and logistics side, and we're so excited that you're able to honor our invitation. Thank you so much for coming, Miisha. Just a very short, brief introduction of JetStream. JetStream is basically a digital freight forwarder operating out of Ghana and now very recently Nigeria, doing also working capital financing and helping with that with the customs clearance for export and import customers and shippers within the African continent. Very, very exciting stuff. But Miisha, do you want to introduce yourself really quickly?
That's wonderful. It's a pleasure to be here. I am Miisha Addy, co-founder and CEO of JetStream Africa.
Appreciate it. We've got a few questions for you today and we'll just dive straight in.
Yeah. So maybe I can go first and just kick us off. But most of the time, Miisha, the common argument against digital freight forwarding is that there's not enough volume out of African, right? There's just not enough digitization. There aren't enough nodes to plug into to add value-added services on top. And I mean, the list goes on, right? So what is your viewpoint on some of these challenges that are being sort of levied against the digital freight forwarding space?
I think supply chain generally has got to be one of the most important industries that nobody knows about. And it has this characteristic of being really the foundation of how so many of the products that we enjoy in Africa arrive here. And it's the key really to economic transformation on the continent. But very few people understand what it is and how big it is. So when you look at import-export trade continent-wide, it's a $1 trillion business, and just the freight forwarding part of it, just the logistics operators who move the cargo from A to B across borders, that industry alone is $32 billion across Africa. So it's a high impact industry with a lot of revenue being generated today, even before transformation, before economic development. But it's just poorly understood because the people who are involved in transporting cargo and supporting trade are usually siloed. So it's not a consumer industry. They often have to have licenses or special experience to be able to do the work. And it's not well marketed to the public. The economics of logistics can be difficult. And I think a lot of people think in their heads about the trucks they see on the road. So if you're driving on the highway in West Africa, Ghana, Nigeria, a lot of times you'll see these trucks parked by the side of the expressway with their tires in bad shape. The tarp is coming off the top, and logistics looks like a very gritty, very low profit industry from the outside. But there are ways of running a logistics operation that are optimizing the assets that exist, using technology to reduce the manual effort, and combining different value-added services into the logistics offering to make it more economically profitable. When I have a little junior kid coming, just a second.
See. As we know, Miisha, mother and entrepreneur, extraordinary. I remember when actually having conversations with Miisha to start out, she had actually just had her baby. She was kind of like, "I'm really sorry. I've just had my child. Give me a week to get back to you." And I was like, "When do you leave? You more than a week to get back to me. I think let's relax." Yeah.
Yeah.
So,
Glad with Miisha. Thank you. I appreciate that. But
okay. Where
Yeah. I mean, I think all tends to follow. And, I guess my question is, how do you go about building a regional champion? I think one of the challenges in digital freight forwarding is, the view is that it's typically overcrowded and poorly digitized. So even internationally, the largest freight forwarder owns only less than 5% of market share. So, this idea of value-added services is very valuable to build an enduring business. So my question really is, are the necessary rails for value-added service implementation adequately developed in Africa? And how do you approach that build versus buy decision?
Yeah, there's an emerging number of companies that are becoming digital partners for JetStream and those value-added services. So when we think about the most important value-added services outside of logistics, we think about financing and insurance. And the financing side, the banks and fintechs that have emerged out of West Africa, Kenya, South Africa, enable us to plug in our logistics platform into their APIs and take advantage of the automatic integration they make possible. The insurance industry has two big e-brokers, Lamy and Curacao. We're integrated with both. So although it's true, there's a lot of fragmentation in the industry and it's difficult to bring people together. The technology that we're using, the ability to use API integrations to plug our platforms together is the answer to that fragmentation.
makes a lot of sense. We are actually invested in Lamy, so thank you so much for doing this. One of our portfolio companies. But I think, one of the other big things is, what are the other big challenges to cross-border trade in Africa? I mean, you're operating in Ghana and then now have moved into Nigeria. I mean, why is it sometimes easier or cheaper to kind of go to Europe first from Ghana than it is to get from Ghana to Nigeria directly? What are some of those structural challenges that you're facing from JetStream's perspective?
So there are infrastructure challenges. There's a lack of working capital, but from a customer's perspective, so that if we're dealing with an exporter, their customer is an importer, and their customer wants to have a high degree of certainty around when the goods are going to be arriving and what shape, how many they're going to be in. And so that certainty is the biggest problem, I think, in African trade. You don't know what's going to happen. There's too much volatility, shipment to shipment. During COVID, we saw freight prices increase by 15x. And so, a year ago, they were $1,000 and then they went to $15,000. Even after COVID, the range of freight price fluctuations is a lot smaller, but you still see big differences in transit time. using the same trade corridor between Ghana and Nigeria, for instance, can take anywhere from 4 weeks to 1 week, depending on the number of checkpoints and the route that the driver uses. That volatility is fatal to trade because it prevents customers who want to do business with each other on the continent from predicting when they're going to get their goods and what shape those goods are going to be in. When you think about imports from around the world that come into Africa, those imports still have to face the same challenges at the ports that regional trade does. But what we see in regional trade specifically that's going through the land-based trade corridors, that's where you get the volatility. That's where you get the predictability on both sides. So you have a undercapitalized African port or terminal on one side, and then an undercapitalized African port or terminal on the other side. And that just compounds the problem.
Yeah, because there's working capital and cash flow issues on both sides. So then it's hard to do business because you're saying, but I need the cash, and they're saying, but I need the cash as well. So
Yeah.
bit of a tough one.
Yeah.
Yeah. So, from a market perspective, how do you solve that challenge of cross-functional characteristics of logistics, right? The port that Nigeria is the port of Ghana, and you're trying to orchestrate between these two nodes. How do you approach that logistics?
The foundation of our business is e-logistics. So we have staff that's trained in customs clearance. They're trained in truck brokerage, warehouse handling, et cetera. So at the very basic level, the service that we're offering is technology-enabled logistics. But the layer of value that we provide on top of it is a connection to other services. So the ability to book cargo insurance at the same time that you're booking a shipment, the ability to get financing, including foreign currency financing for your imports at the same time you're booking a shipment. It's the integration of all of those services in the same motion that the customer is making on our platform that sets us a little bit apart from companies that are just doing the logistics.
So, we touched on a really interesting point, but we've danced around it a little bit. Working capital or supply chain financing. Why is that important in this conversation? We're talking about cross-border trade. Surely everybody has their monies together. Why is working capital important in this conversation?
So the norm for global shipping is that banks support trade financing. And I think the percentage of trade finance that's supported by banks globally, it's shipping that's supported by banks globally, is around 80%. In Africa, it's half that. In West Africa, it's a quarter of that. So there is a massive $80 billion trade finance gap on the continent that's specific to some of the financing challenges we see here. It's difficult for banks to finance customers they don't know. And because in many countries, including Ghana and Nigeria, where we do business, there are not reliable credit bureaus, and the lack of information sharing in these countries makes it very difficult to determine who's a good payer and who's a bad payer. As a result, since COVID, the banks have actually pulled back from trade finance lending, especially to SMEs. And the typical scenario that we see is that our customer will have maybe 10,000, the equivalent of 10,000 US dollars in their bank account, but they need to do a trade worth $100,000. The value of the goods in the container is many multiples higher than the amount of assets they have on their balance sheet or in their bank account. They're going to be rejected by a traditional finance provider because they don't have that money in their bank account. Because JetStream controls their cargo, because we know their trading history, how many times they've done this exact shipment, that exact trading partner, we have a better sense of their credit worthiness separate and apart from their bank statement. We also have more control over the collateral that we think matters most to the transaction, which is the goods in the container, which can be liquidated if the customer doesn't pay back.
That's a really important point that you raised, that banks don't know the customer, so they don't know how to risk grade and to be able to lend to them. But Jetstream has that visibility of the cargo and of potential collateral, so you are able to lend them. What were some important and key learnings that you found when setting up your supply chain finance arm? What were some of those things that you learned and you were like, whoa, I did not know this before. This is really important and I should definitely consider this going forward.
The first learning for us was understanding the relevance of trade history. So when we first started lending, we were more focused on sort of the financial statements and does this customer have, cash liquidity to pay us back? Over time, when we saw good payers distinguishing themselves from bad payers, we realized that the good payers tend to have a level of expertise in the specific commodity that they're trading. And they know their trading partners well. And so the role that JetStream plays in their supply chain is basically helping them scale up something that already works, rather than helping them experiment into a new line, which even if they're cash rich, even if they have assets, tends to go wrong more quickly.
Very important. And you touched
Yeah,
on
I
data,
mean,
but I'll let somebody else get it there.
yeah, I think it's could be interesting that as a startup, be straightforward as fintech and pseudo digital identity management because you're creating all of this transactional history. Now, there's this large market opportunity. What's been the biggest blocker to some of your market incumbents? I think the trade financing gap is well understood, but why do the banks just not? Do they just not understand the market? It's just not worth the risk, or they're not rating the risk correctly. What's been the big impediment in their participation in the broader economy?
Yeah, so it's risk aversion. We are actually partnered with banks in Ghana and Nigeria, and the mechanical way that our trade financing works is that we guarantee the loans that they make. But the reason they need the guarantee again is because they have a lot of anxiety about SMB loan performance, and they've been burned in the past. And in places where the rule of law is a bit weak, it can take years to claim their money from bad payers. So they pulled back for, rational reasons based on their experience. There also historically has been competition between business borrowing and government treasuries. So if this was before the IMF troubles in Ghana, but if the government is paying 20 plus APR at that time was viewed to be a zero or low risk borrower, the bank sort of did the math and figured that that was a better credit risk than lending to an unknown SME with assets that they can't find. And so I think there is a combination of rational business reasons and also just the unfortunate competition that some businesses in Africa have with their own governments in securing capital.
I think my last point on this is that I think that's particularly interesting, from a risk rating perspective. Makes sense, to have a platform against a party like JetStream, because not only do you have that transaction data, the shipping routes, what's on board. It's also you financing productive assets. Now, the reason that a lot of banks have been that they just didn't have that visibility, and hopefully, they can provide more balance sheet lending and plug in, because as I had mentioned, the large market opportunity. I think as we understand this a lot better, we can price them correctly, and it creates just more productive, beneficial.
I mean, that definitely leads me to my next question, which is, why is the data so valuable? Why is this transaction data, this, almost kind of building out a view of these SMEs that banks don't have? Why is that kind of almost your competitive advantage, actually?
Yeah, the data is hugely valuable. It's valuable to the customer themselves, but it's also valuable to the entire ecosystem. So the customer benefits from the data on supply chain performance because it enables them to optimize things that are going wrong. A analogy would be, if you have a car, an older car that needs to go to the mechanic every few months, you go to the Dominic, every time you visit, he gives you a different bill. You're paying a different amount and you never know why you're paying a different amount. Impossible for you to determine whether you have an honest mechanic who's just experiencing faults in your car, or whether you have a mechanic that likes to make, idiosyncratic markups every time you visit. That's supply chains globally, but especially in Africa. There's a minimum of 9 different vendors, independent, fragmented vendors speaking 2 different languages, using a minimum of 2 different currencies, that are touching every single shipment that goes from A to B. It's unclear to our customers before they came to JetStream how much the service being provided, how much the freight actually cost compared to the markup, how well performing each segment of the supply chain is. So you can have a 6-week shipment that spends only 3 or 4 weeks on the ocean and then spends the rest of the time, 2 or 3 weeks, at the ports. The GPS location of those containers that you're shipping has not changed. It's in the same physical place, but the flows, the number, the people who are actually moving the paperwork to get your containers out of the port and into your facility, that's where the bottleneck is, and there's no visibility there. The first impact of data and visibility is to give customers more information about their own shipments so that they can manage each segment and decide which vendors are performing well and which aren't. But the bigger picture opportunity is really around finding new trade routes, new trade corridors, identifying who is a good pair, who is a bad pair in the trading industry, and understanding where there are opportunities for growth. One of my favorite numbers in Ghana is coming from the cocoa sector, which is one of Ghana's most important industries. So, as many people may have heard, 60% of the world's chocolate is its origin in West Africa, Ghana and Cote d'Ivoire. But Ghana and Cote d'Ivoire typically sell the raw cocoa beans to importers around the world. They don't process those cocoa beans into chocolate. In the past 10 years, there have been about a dozen new companies in Ghana that are going from bean to bar. So they're processing the cocoa beans, they're converting it into finished chocolate. As these entrepreneurs who are making finished chocolate have looked for markets to sell their chocolate, they have not been able to sell to the countries around the world in the West and Asia that only need the cocoa beans. Some countries already have factories and manufacturing plants. But they have been able to find willing buyers right here on the continent. So today, Nigeria is the biggest importer by a long shot of Ghanaian finished chocolate in the entire world. Country just two countries over is Ghana's biggest customer in finished chocolate goods. And I think that's an important insight that a lot of people don't know. And I think the ability for us to look at the data of what's being produced in one country, what's being sold in trade, can help entrepreneurs make better business decisions, can help development agencies make better investment decisions. And I think that's one of the most powerful things about this data, above and beyond its utility to individual customers.
I want to ask a little bit of a cheeky question, but obviously we know supply chain visibility is really, really important. But we're also seeing an interesting trend where most supply chain and logistics startups claim to offer data analytics and supply chain visibility. So has it become more of a standard feature, or is this still a disruptive thing to offer if you're starting in the space?
It is the earliest days of visibility, especially in Africa. And one of the reasons this is true is because there was a supply chain startups developing essentially ERP system in the cloud in the past, 15 years. So they developed these heavyweight systems that theoretically enable all of the different stakeholders in the supply chain to interact on the same platform. The problem with those heavyweight systems is that they overlook or are difficult to use, or the fragmented mom and pop shops that are honestly responsible for more of the supply chain than big companies. So you have your truck drivers that can make only one truck. You have your customs brokers that don't even have an office. It's a 1 or 2 man shop. Those supply chain actors are especially important to the way that African trade moves. And those big heavyweight ERP systems are not talking to them. They're not for them. And so there's no visibility around what those people are doing. The innovation in large language models is the first opening that I think the African logistics industry has to skip over to leapfrog the ERP system and go straight to WhatsApp, email, and voice integration. We can translate the information that those small fragmented players have directly into visibility data that we all need to use without requiring them to participate in a heavyweight ERP ecosystem.
Very, very cool. So I'm just being cognizant of time now. We have time for just one last question.
Yeah. A final one. Wanted to understand, what is your long-term vision for JetStream?
So we want to help build ecosystem for trade on the African continent. Our role in building that ecosystem is to build a platform that enables our customers to both see and control their cross-border trades. The C part is based on automated visibility that gives them real-time information about where their cargo is going, where it is, how much it costs, and let them look back and optimize those trades. The control is about interactions between our platform and our customers and the vendors who are providing the service. So that's the vision, is to bring the ecosystem together, or help do it by integrating all the players online, giving visibility and engagement through technology.
Awesome. Thank you so much for your time, Miisha. I really appreciate it.
Oh, okay, lastly. So, Miisha, if anyone wants to get in contact with you, how can they get in touch, find out more about some of the great stuff you're up to at JetStream?
Yeah, so they can visit our website, jetstreamafrica.com, or look at us on Twitter, JetStream Africa, or me personally at Miisha Addy.
Thank you for joining us on this exciting journey through the world of venture capital and entrepreneurship. We hope you've gained valuable insights and inspiration from our discussions with visionary founders. Remember, the future is bright, and those who dare to dream and take bold steps towards building innovative companies. If you have any questions, feedback, or suggestions for future episodes, we'd love to you. Feel free to reach out to us at info@newtownpartners.com. We're always eager to connect our listeners and engage in meaningful conversations about startups, funding, and the ever-evolving landscape of business. Don't forget to subscribe and follow, and stay tuned for more exciting future episodes and expert advice from successful entrepreneurs and venture capitalists. Until next time, goodbye.